of this calendar year, voting 11-1 to lower the benchmark interest rate by 25 basis points or a quarter of a percentage point. The new rate now stands in the range of 4.25 to 4.50%, aligning with Wall Street expectations. Now, this marks the third consecutive rate cut by the Fed in 2024 and the second straight rate reduction of 25 basis points. Fed Chair Jerome Powell and his team emphasized caution, with the panel now forecasting only 2 rate cuts in 2025. Now, this outlook follows the latest inflation data, which continues to show consumer prices in the US to remain somewhat elevated. Let's listen in to the commentary from Jerome Powell.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course.
Okay, so let's make sense of what Jerome Powell said and the caution that he's talking about with Gaurang Shah, Senior Vice President, Gio Financial Services, joining us this morning. Gaurang, good morning. Good to have you back this week. Earlier, before the Fed FOMC had begun, you and I were talking and we were expecting this 25 basis point cut. Perhaps what we didn't factor in was that only 2 cuts expected next year. And with that commentary coming in, the US markets have taken a massive beating yesterday with the indices and the top stocks all down. Is this going to impact the Indian stock markets and going forward the Indian economy?
Thank you, Karthik, and morning to all of you all. So I guess last night's rate cut or last evening's rate cut, like we discussed earlier, was more or less in line with what large section of the market expected of 0.25 basis cut. What the market did not expect was the statement of only 2 rate cuts, depending upon how data has come up in the coming months. This was, I think, 4 rate cuts earlier this year when Mr. Powell made a statement that 2025 could see 4 rate cuts, but now it is down to 2. And I think this will also be monitored, especially in the month of Jan, that is next month, 2025. When President-elect assumes his Oval Office, and the policies that he has spoken about, tax cuts and tariff hikes, I think this will definitely...
Tariff hikes. You're right, Gaurang. I think, that is something that, and reciprocal tariffs is what Trump is talking about. What is this really going to do to India and Indian trade with US?
I think we'll have to wait and watch. Let Mr. Trump assume his Oval Office, and let's see what he does in terms of tax cuts and tariff hikes. Well, if he has to do what he has said earlier before the election and during the campaign, then I think a lot of people will have to recalculate their mathematics in terms of where we are likely to be, especially Mr. Powell, because I think this will lead to inflation push. And if inflation moves up, I think there is very little room for the Fed to cut rates. So we'll have to wait and watch. For India and rest of the world, I think it will be a balancing act as to what is going to be the quantum. So I think making a preemptive judgment is going to be very, very difficult. I think we'll have to possibly take everything as it comes in our stride.
Okay, but having seen one term of US President Donald Trump 4 years ago, and now he's going to be back in office, there could be some broader understanding of his policy stance towards India and China. When he got elected, the mood was a little high that Trump is anti-China, but he's going to be pro-India. Do you see, in your opinion, Gaurang, this narrative now shifting a little bit?
Well, I think, political leaders across the world say a lot of things before the election, and post-election, if they happen to win, once they assume the office, a lot what they've said earlier possibly goes into the deep freeze. So it remains to be seen, and it's going to be very difficult for US to just go and hike tariff across nations, including India, China, Canada, and maybe the rest of the world, because they are also largely dependent on a lot of things which come into their country from the other countries. So, it's going to be difficult whether he shifts the stand or whether he's going to shift the goalpost. I think only time will tell. But yes, he has spoken about reciprocal tax the way India does on US. US is going to do on India. Again, I would say the same thing. Let's wait and watch.
Okay, let's wait and watch. I want to now get a slightly broader understanding with the US markets crashing yesterday, their time, once the Fed decision and the Fed commentary came out. Going forward, do you see an impact on the Indian stock markets as well of the US Fed's decision?
I don't think so. I think large part of it is done and dusted. It's discounted not only in India but across the globe, because 25 bips was expected and 25 bips is delivered. What spooked the US market is the statement made by Mr. Powell in terms of rate cuts for coming year, calendar year 2025. Instead of 4, it is going to be 2, I believe. That's what I heard earlier this year when he made a statement that he expects 4 rate cuts to come through in 2025, but now it is down to 2. And like I said, Karthik, if Trump does what he said, then possibly this too will also be revisited in terms of inflationary pressures and where the inflation number goes and lie. Right. So my sense is that I don't think we have been correcting over the last 3 days. After last week, Friday's stellar recovery, we've been correcting since the time we started this week. A very crucial zone closer to 24,000, 23,800. I think we should be able to find a floor. But I don't see any major sell-off or a major recovery coming. India VIX is also at an elevated level, which brings in a lot of volatility.
All right. Well, let's stay, Gaurang, with Indian markets now. An Indian capital market regulator, SEBI, has rolled out significant changes to strengthen investor protection and streamline market regulations. While 10 key updates were approved, let's discuss one of the 4 of the most impactful ones. Number 1, Gaurang, I want to come to you with stricter SME IPO rules. Now, SEBI now requires SME IPO aspirants to show operating profit of 1 crore rupees in the last 2 of the 3 years. Plus, promoters can now sell only up to 50% of their holdings during the IPO. How is this likely to impact SMEs wanting to raise funds from the capital markets, Gaurang?
So, Karthik, I think clarity and discipline is what SEBI wants to bring in, whether it is primary market or whether it is SME market. And we all know, Karthik, in the last 6 months to a year, what kind of paper has come in the SME segment and what kind of activities have happened post-listing. So my sense is that this was the need of the hour. And as we go forward, I wouldn't be surprised to see more policy changes or new policy coming in to safeguard the interest of the investor.
Gaurang, I just want to understand, there are separate rules for SME listing and separate rules for startup listing. Now, startup listing rules seem to have been simplified, and startups listing on the Innovators Growth Platform will now need only 25% pre-issue capital from QIPs. Is this going to ease their path to funding, or why are we seeing this discrepancy between SMEs and startups in the first place?
I think primarily because of the scope and the nature of business and the kind of early stages of any new business planning to possibly take off. So, and of course, the government push has also been there to great extent as far as the startups are concerned. But there again, there have been a lot of issues with respect to failures in terms of the success rate that we are witnessing.
Okay.
So, over here also, I think, Karthik, it's still a little bit premature stage. As and when the momentum picks up, I think there will be a lot of policy changes and regulations coming in to possibly streamline and see that, the objective and goals with respect to what government had planned and what these startups are doing or even SMEs are doing, actually go and see that path of light and growth.
Gaurang, well, we are talking about SMEs and we are talking about startups. Let's just take a quick recap on the blockbuster listing day on Dalal Street yesterday, as 3 companies making their stock market debut delivered stellar day 1 gains for investors. Leading the pack, of course, was digital payment giant Mobikwik Systems, which shares skyrocketing 90%, closing at 530 rupees per piece. While this was, of course, in well above the issue price of 279, Vishal, Megamart and pharma company Sai Life Sciences also impressed, each gaining around 40%. Gaurang, listing day gains, are we likely to see some correction, or how do you see the robust business models of these three that finally hit the markets yesterday?
A pleasant surprise to see all the three new IPOs listing on the same day, seeing this kind of gains. This only goes to show the kind of appetite that the markets have for primary market listing. I'm talking about only good, sound, strong, fundamental companies at reasonable valuation, which leaves a lot on the table for the investor. Now, I will not speak with respect to listing gains because I'm not qualified to do that, to be very honest.
Sure.
But as a disclosure on Vishal and Mobi, we had a subscribed recommendation on the IPO from a long-term point of view. And my sense is that they will possibly continue to see growth as we go forward from here on. Now, whether today, tomorrow, we are going to a similar, because yesterday was a stellar rally.
Right.
Maybe we might see a little bit of profit booking coming in from all those investors who have only participated in these IPOs from a listing gains or a very short-term point of view, or those who have leveraged funds and have to take care of their obligations.
All right. Well, we'll have to wait and watch. This is going to be pretty much the first day. If yesterday was day 0, this is going to be day 1 of trading. So we will keep a track on that. Gaurang, let's move now to another startling story and a startling development, so to speak. A record surge in India's gold imports that widened the trade deficit and sent the rupee to an all-time low last month has now been attributed to a calculation error. There are media reports quoting sources that believe that official double-counted gold shipments stored in warehouses after a methodology change in July. The overestimation could be as high as 50 tons, which is nearly 30% of November's total gold imports. Efforts are now underway, apparently, to reconcile the data, with an official clarification expected soon. Now, if confirmed, this error could lead to a revision of the trade deficit figures and ease pressure on the foreign exchange rate. Gaurang, something we've never seen before, a calculation mistake in estimating how much gold we imported, and hence, the fiscal deficit number and the current account deficit number actually pretty startling.
So I think reconciling and rectification is going to be the need of the hour, to be very honest, Karthik. It's rather unfortunate that something like this has happened, because it is not expected of the agencies or the authorities to do such an error in terms of calculation of whatever imports we've done. Again, it is a matter of time till the time it is rectified and reconciled. And then reciprocative reaction on the currency front also. But, dollar is not only strong against rupee, dollar has been strong against the rest of the emerging market currencies as well as developed economies. And for US also, having a dollar with this kind of a strength is not very, very feasible. Now, as far as this gold, mix-up is concerned on the number front, I think we'll have to give it a day or two for the clarification and the rectified numbers to come through.
All right, we will wait for a day and two and see what our trade numbers and our gold import numbers look like. Moving on to another interesting story is coming by way of India's net direct tax collection, which has seen a major rise, growing by over 16% year on year to reach close to 16 lakh crore rupees as on December 17th, according to the fiscal year data released by the government. The growth has been driven largely by a 21% increase in advanced tax collections, which totaled 7.56 lakh crore rupees. This includes 7.42 lakh crore rupees from corporate taxes and 7.97 lakh crore from non-corporate direct tax collections. Additionally, the government collected 40,114 crore rupees in security transaction tax between April 1st and December 17th this year. On the refund side, 3.4 lakh crore rupees was issued, marking a 42.5% increase compared to the previous year. Gaurang, we see greater compliance now in in both people paying taxes, corporations paying taxes, as well as the refunds which are issued in time. But another data point yesterday suggested that only 6.68% of all Indian citizens pay taxes. Maybe early days, but do you expect the government in the upcoming budget on the 1st of February next year to actually come out with strategies to widen the tax base?
How and when they are going to do is a big question mark, Karthik, because large part of our population depends upon agri activity, and as we all know, they are not liable to pay taxes. When it comes to direct tax collection figures, possibly it gives you an indication that the third quarter earnings should be a little bit shade better than what we have seen in the second quarter, which was rather a disappointment. So let's hope that third quarter numbers are something positive. Just assuming the numbers on the advanced tax front. Individual tax collection, well, I think it's going to be a very tightrope walk for the government to widen the tax gamut in case if they have to bring in more people. And what is going to be the tax slab over there? That will be wait and watch. GST collection has also for the last 7 months have been clocking 1,70,000, 1.70,000 crores on GST front. That is also something very, very positive. I guess this should possibly ease the fiscal balance sheet of the government and possibly throw in a little bit of more positivity as far as the deficit is concerned.
All right, Gaurang, well, we are running out of time, but I really want to bring this one more story for your views. And this is and it may not really have a larger impact on the markets or even the economy per se, but this is this fast race towards fast delivery with Ola now also getting into the rapid food delivery, 10-minute delivery service, which it has initiated in Bengaluru called Ola Dash. And the latest now is that this 10-minute food delivery will actually be on the ONDC platform. Gaurang, what is this race towards fast delivery, quick commerce? How sustainable, in your opinion, is this fight among all players, startups and non-startups, to really go after this quick commerce game?
So very soon you will have Amazon already launching its quick commerce platform in form of Tej, if I'm not mistaken.
That's right, Amazon Tej.
Next year, you will have Zepto also hitting the street with IPO. That's what I heard the management talk about. You know, my only prayer and wishes to the delivery partners, because I hope the companies do not put them under pressure to gain market share and do faster deliveries. So that's going to be risking a lot of unnecessary, accidental kind of a scenario. Of course, a lot of quick commerce companies have been offering, refund, some kind of a discount coupon in case if the delivery is not done within that stipulated time frame. It's going to be a very interesting sector to be. Let me give a disclosure. On Zomato, we have a fundamental coverage. On Swiggy's IPO, we had come out with a subscribe recommendation. Again, I would say only one thing, Karthik. I hope the pressure is not on the delivery partner.
All right. Well, we will leave it at that. Gaurang Shah, thank you so much for taking out time this Thursday morning to be with us, for all your insights and the valuable opinions that you have shared. It's time for a break. But before we do that, the Indian stock markets have opened and it doesn't look good. Nifty, Sensex both down about 1.2% each, and the small cap and mid cap space taking a slightly bigger beating, down about 1.65%. What Gaurang Shah was talking about, the India volatility or India VIX, that is up 7.14%. We'll try and make sense of all the data that we are getting from the market open and how the various sectors are going to perform today. On the other side of this break, joining us will be Amit Kumar Gupta. Stay tuned to Morning Brief at 9. We'll be back with Amit Kumar Gupta and more stocks and news to cover on the other side of this break.
You remember when someone had hit our car? I had got him to pay up for all the damage.
Yeah, so?
If something goes wrong in this guaranteed returns share, I will complain to the exchange and get full compensation. See, this is an agreement.
Dad, you know what? Nobody can promise guaranteed high returns in the share market. Such illegal schemes are sheer fraud. The exchange will not give any compensation for these. That agreement is also useless.
सोचकर, समझकर, invest कर.
Bonjour, मैम.
आज बड़े फ्रेंच बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पेरी. तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तरह.
मैडम इरादे कभी ऑफ नहीं होते. टेक ऑफ करते हैं.
SBI Life Smart Platina Supreme के गारंटीड रिटर्न से करो पूरे अपने इरादे, अपनों से किए सभी वादे. SBI Life, अपने लिए, अपनों के लिए.
Love XEV9e Mahindra Electric Origin SUVs.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Challenge is part of business.
Success to me means achieving a lot with limited resources.
It is the idea of bringing the best of East and West together.
Welcome back. This is Morning Brief at 9. I'm Karthik Malhotra, and now it's time to look at how the Indian stock markets are performing in early trade this morning. Not great news coming in. Most sectors happen to be in the red. Let's start with the big ones. Nifty 50, Sensex, both down about 1.1, 1.2%. Greater beating for the Nifty mid cap and Nifty small cap. India VIX, the volatility index, started a little higher. It has relaxed a few points, but still holding at about 15.14. Not looking good. Let's just take a look at some of the sectors and the stocks in the Nifty 50 index and how these are performing today. Well, pretty much all sectors looking in the red. If you bring up the heat map here, you'll see the IT sector, especially with Wipro and Infosys down about 3.2 and 2.2% respectively. You've got the entire banking BFSI pack also in the red, and overall even the consumer durables, M&M, Maruti, Tata Motors, the mood on Dalal Street not looking too good this morning. Let's compare it to how the US markets had closed yesterday, and oh my god, just look at your screen. The US markets have taken a massive beating after the Fed commentary that came in yesterday, which stated that only 2 more rate cuts are expected next year. That's the kind of beating that the US stocks have taken. Look at Tesla. Tesla closed about 8.2% down. Amazon closed about 4% down. And the entire Apple, Nvidia, Microsoft, Google, Netflix, Meta, none of the big NASDAQ companies took the news very well as expected. Well, let's understand what the US Fed and its decision and its commentary is likely to do for the Indian markets, not just today, but in the medium term. Joining me on the show now is Amit Kumar Gupta. Amit, good morning. And just help us make sense of the morning mood on the Indian stock markets. How much of this has to do with what happened in the US, and what are the other factors which could be driving the markets down today?
Hi, Karthik. Good morning. Thank you for having me. The Federal Reserve have implemented their 25 basis point rate cut. So that takes us to 100 basis point rate cut in the last 3 months in September meeting. So in a way, it ends the Fed's policy adjustments with the Fed Chairman Jerome Powell indicating a more cautious approach going forward. And rightly so, the upcoming Trump administration has shifted expectations for the economy in the next year in 2025. Remember, he's going to take charge from 20th of January. And there are, a lot of adjustments will be made in the tariffs and the trade wars, etc. The Fed has noted that, some of this will factor in the potential rate cuts which they'll have in the forecast. So earlier expectation was that there are going to be 3 or 4 rate cuts in 2025. With the latest dot plot, it is down to 2. But still, it's very dynamic, depending on the environment. But for now, I think the rate cuts are sort of priced in the 100 basis point, and there will be no rate cut probably in the January meeting. And then in the March meeting, we'll see how the economy unfolds, what are the tariffs which have come into the play. And accordingly, the Fed will take its call of further rate cuts. One negative sort of point which occurred from the meeting was that Fed does not anticipate that inflation will come down to 2% in 2026. They have pushed it by 1 year to 2027. So I think that's a bit of a negative where the sort of market corrected in the US, and we have followed up that this morning here in the Indian markets as well. Right. I think probably the negative factor would get priced in 1 or 2 days. Because from now on, it's more about what Trump does rather than these daily-to-daily movements. Because eventually that will create a lot of volatility going into the next year.
All right, Amit, I want to get your view on which are the sectors in the Indian markets which are most likely to get impacted by whatever the US Fed does and whatever Trump does when he comes into office, especially with respect to tariffs that he is saying that he would impose on India. Is it fair to assume that India's IT sector is in for a fairly turbulent time going into 2025?
In general, the IT sector has withheld a little better than others, because remember, there has been a 100 basis point rate cut also. So that eases up a little bit of liquidity, and that helps IT sector in general. Okay. But the sectors like chemicals, sectors like textiles, even autos, I would say that these sectors will be far more impacted, because there, if the tariffs wars again start, and on top of that, you have rise in inflation as well. Then, the supply chains again get distorted, like we saw in 2021 when the Russia-Ukraine crisis broke out. And then that creates a lot more impact on these sectors rather than IT sectors. Because IT, once you've got a project, once you've started implementing, then there is not much change. The only thing which changes is a little bit of slowdown in getting those projects. But implementation is not a problem. Whereas in other sectors, it becomes a problem to implement or fulfill the orders. So my sense is that, a lot of these sectors can have a headwind suddenly when the tariffs war come. But ultimately, the stronger ones will, push through, and the weaker ones would face far more problems. So I'm talking about like company specific.
All right, Amit. Well, let's shift focus now as Nifty actually continues to reel under pressure. It has fallen below the 24,000 mark and stays well below those levels, about 150 points or so below the 24,000 level. Let's move on to you talking about the stronger ones and the weaker ones. Let's move on to a strong growth story, Amit, which has come by way of Zomato. Well, food delivery giant Zomato has made remarkable leaps, surpassing automobile major Tata Motors in market cap just ahead of its upcoming inclusion in the Sensex, the main index of the Bombay Stock Exchange. Remember, Sensex is a list of the 30 most valuable companies with the highest market capitalization in India, and it is going to be Zomato which will be included in that list of 30. Well, Zomato's market cap has surged 162% year to date, reaching 2.83 lakh crore rupees, overtaking Tata Motors 2.79 lakh crore rupees market cap. Amit, what do you make of the Zomato stock? We will come to Tata Motors also, but for those who have been invested in the Zomato story, or those who've been waiting in the wings to see whether there is some momentum, or is this going to be a bubble, what is your view on the Zomato stock?
No, my view is that, firstly, as a disclosure, we don't have a positions in Zomato or Tata Motors. But, my view is that, eventually all the investors are playing the growth story in Zomato. So till the growth is coming, especially in the quick commerce space, then the investors would continue to like Zomato stocks. But as we know, the competition is really heating up in quick commerce space. You now have Amazon page coming up. You have Ola Dash there. You also have, Big Basket now. So almost every company will be planning to launch or have already launched this 10-minute kind of a delivery. And I'm not 100% convinced that, going, let's say 6 months, 12 months down the line, which player is going to be the winner, or which player will actually corner the market share. Obviously, Blinkit is currently the leader and doing very well. And a lot of Zomato valuations is because of Blinkit and not so much because of the food delivery. So out of 300 rupees, I would say approximately 180, 190 rupees comes from the quick commerce Blinkit space. Right. So if that continues to grow and they are able to, corner more market share, then I think it makes sense for Zomato to, sustain these kind of valuations. But if at any point of time the growth is impacted, then I think we'll see a sharp derating also happening in the stock price. Okay. As far as the inclusion in Sensex etc. is concerned, I think that's a bit of a momentum play. The market caps goes up, the stock comes into the indices. The market caps goes down, the stock goes out of indices. Remember, in Tata Motors case, ever since they have announced a demerger, there was always a concern that now there are two companies and both of them will not be able to be part of the Sensex or Nifty. Right. So they are demerging the CV and the PV part of the business. So I think, the stock has also been under pressure since then.
All right. Well, I want to just spend a minute more on Zomato. The PE ratio of Zomato coming at about 347. Do you think this stock could be heading into a bubble territory, Amit?
So I think the PE is not the right metrics to evaluate Zomato or even Swiggy kind of businesses. These are eventually high growth businesses, and how much free cash flow you can generate over a period of time, that is going to re-rate the company. As far as bubble is concerned, where till the growth is there, the stock would do well. But at any point of time, and we have seen that happening, that a lot of demand in the economy that is getting impacted. You have this K-shaped recovery where the rich or the higher upper income people are able to do a lot of purchases from the economy. A lot of discretionary income is there, but that is not happening at the bottom end. So government has to give in a lot of incentives to that kind of people. So I think there is a sense that demand will get impacted. How much of that demand gets impacted in the quick commerce, that needs to be seen. But my sense is that the growth parameters on which these quick commerce companies are getting launched, that's more of a valuation game going on rather than a business game going on. So it will be difficult in the next, I would say, 6 to 12 months for companies to sustain these kind of valuations, because growth will get tapered and the numbers would sort of shrink a little bit.
Numbers could shrink a little bit and the growth momentum may take a beating. Amit, we are talking about quick commerce, so let's shift focus now to another company, and this is India's largest automotive aftermarket platform, myTVS, which is revving up with myTVS Hypermart, a quick commerce venture for distributing automotive parts and lubricants. Deliveries to retailers and business partners will now happen in just 1 to 2 hours. So we are talking about a B2B quick commerce platform, and this is likely to set a new benchmark for speed and convenience in the auto industry. Well, shares of TVS Motor have gained about 2.25% or so in the last 1 month, and this is marginally underperforming Nifty, which has risen by about 2.9%. The stock, however, has managed to outperform other legacy two-wheeler makers like Bajaj Auto, Hero MotoCorp and Eicher Motors, all of which have eroded investor wealth by about 2 to 8% over the same time frame. On a year-to-date basis, well, the stock has delivered returns of about 23% in this calendar year 2024, significantly beating Nifty's 11% rally. Amit, your views on the TVS stock? How do you view TVS now in this context of a B2B quick commerce platform coming through?
Yeah, as a disclosure, we don't own or recommend TVS Motors. So I think this model is basically, to enable the rapid delivery of auto parts within 1 or 2 hours. We have seen that sometimes in the Indian automotive aftermarket, the parts, auto parts, spare parts which you require sometimes in a vehicle, that takes 3 to 7 days or maybe even sometimes even more. So what they're trying to do is that through this Hypermart model, they're trying to eliminate a little bit of inventory burden and releases sort of significant working capital for the retailers. As far as consumer is concerned, I'm not sure. I mean, your car does not really break down so often. So whether you'll require this maybe once a year or maybe 1 in 2 years, I'm not sure about that. I haven't done any detailed study on that. But my sense is that it would help the retailers because that sort of reduces significant working capitals. The dark stores on this will get sort of replenished every week from the central warehouses, so that reduces a little bit of supply chain costs. And you get a sort of a quick commerce kind of experience. It provides a little bit comprehensive parts catalog and real-time order tracking as well. So it helps the retailers more than I would say the end consumers.
All right, so it's good news for retailers, not as much for end consumers. Amit Gupta, we will leave it at that. Thank you so much for joining us today with your views. Well, before we head into a break, a quick look at top global stories making headlines. U.S. stocks plunge after the Federal Reserve cuts interest rate by 0.25%. U.S. current account deficit hits record $310.9 billion in Q3. Inflation in the United Kingdom reaches 2.6% in the month of November, driven largely by transport costs. And as the Bitcoin rally continues, luxury brands consider accepting crypto payments. Renault has supported Nissan stocks with Honda amid a potential alliance. Nissan shares surged 20% on the same report of a possible alliance with Honda. Alphabet's robotaxi Waymo expands with its first international robotaxi testing program in Tokyo, even as competitor GM shuts down the Cruise robotaxi project in the US. Staying with the auto sector, Volkswagen resumes talks with unions over cost-cutting measures at its German plants. Another German brand, Birkenstock shares rise 7% following strong Q4 results and fresh styles. All these stories and more on the other side of this break.
Mahindra Electric Origin SUVs.
Bonjour, madam.
आज बड़े फ्रेंड्स बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पैरी। तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तरह।
मैडम इरादे कभी ऑफ नहीं होते, टेक ऑफ करते हैं।
SBI लाइफ स्मार्ट प्लैटिना सुप्रीम के गारंटीड रिटर्न से करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ, अपने लिए, अपनों के लिए।
Challenge is part of business.
Success to me means achieving a lot with limited resources.
It is the idea of bringing the best of East and West together.
We made history for a reason tonight.
Will it change the shape of American foreign policy? Violence has erupted in Manipur once again. How can we pass judgment, sir, before any inquiry that, they were volunteers or militants, sir?
Welcome back. All the top stories coming from around the world this morning in the world of business and economy right here on Morning Brief at 9. Let's begin with the Wall Street. U.S. stocks have suffered a sharp loss as all three major indices posted their biggest decline in months following the Federal Reserve's decision to cut interest rates by 0.2%, but 0.25%, I beg your pardon, but stating that only 2 more rate cuts expected next year. Take a look.
U.S. stocks plunged on Wednesday, with all three major indexes posting their biggest daily decline in months after the Federal Reserve cut interest rates but signaled a slower pace of rate cuts to come. The Dow dropped more than 2.5%, suffering its 10th straight session of declines, one shy of its longest ever losing streak. The S&P 500 plummeted nearly 3%, and the Nasdaq nosedived more than 3.5%. The Fed cut rates by a 0.25 percentage point, which the market had all but priced in. But the central bank disappointed investors by signaling it may cut rates just twice in 2025, given the solid labor market and the recent stall in lowering inflation. Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth Management, thinks even that's too much and that the Fed shouldn't cut rates at all in 2025.
I'm at 0 for next year. I don't necessarily think they're going to do that. I think inflation is going to continue to go up. I don't think it's going to go up to 9% or anything, but it's going in the opposite direction of what the Fed wants it to do. And I think that's an environment where you're not going to cut into that.
Despite Wednesday's sell-off, the Dow is up more than 12% on the year, while the S&P has rallied about 23% and the Nasdaq has shot up more than 29%. Shares of cryptocurrency-related companies were some of the hardest hit on Wednesday after Fed Chair Jerome Powell threw cold water on President-elect Donald Trump's potential plan of creating a national Bitcoin reserve. In his Wednesday press conference, Powell said the central bank is not allowed to own Bitcoin and is not seeking a law change in order to do so. Shares of Bitcoin proxy MicroStrategy tumbled 9.5%, while Bitcoin miners Mara Holdings and Riot Platforms plunged more than 12% and 14%, respectively. Small-cap stocks, seen as benefiting from a lower rate environment, also fell after the Fed's outlook, with the small-cap Russell 2000 index shedding 4.4%, its biggest drop since June of 2022.
Well, the Federal Reserve's commentary coming on cryptocurrency and the reserve that Donald Trump was talking about could not have come at a worse time for luxury brands, which were now exploring the idea of accepting cryptocurrency payments. Many high-end stores across France and other countries have said that they would be open to accepting Bitcoin and Ethereum payments. Take a look.
Bitcoin's soaring value has caught the attention of high-end fashion brands and retailers. It's prompting moves to offer cryptocurrencies as a means of payment. That would help tap into fresh pockets of wealth and build loyalty with crypto investors. Until recently, only a handful of luxury brands, including LVMH, Gucci and Balenciaga, have experimented with crypto payment offers. But in recent weeks, upscale French luxury department store Printemps announced it was teaming up with the world's largest crypto exchange, Binance, and French financial tech company Lizzie to accept cryptocurrencies. It will include Bitcoin and Ethereum in its stores in France and will become the first European department store to do so. Luxury lighter and pen maker St. Dupont told Reuters it aims to accept cryptocurrency payments in 2 Paris stores before the holidays. And cruise company Virgin Voyages began this month offering its first product accepting Bitcoin as a payment option. It's for a $120,000 annual pass for up to a year of sailing on its cruise ships. Regulators have long warned that cryptocurrencies like Bitcoin are high-risk assets with limited uses in the real world. High volatility has been another barrier to wide adoption as a means of payment. But support from U.S. President-elect Donald Trump, who's expected to bring in more friendly e-currency regulation, have fueled record-breaking prices for Bitcoin. It topped $107,000 earlier this week. S&P analysts say the narrative is starting to shift. It's noting that blockchain innovation in financial markets could increase predictability for cryptocurrencies. Luxury labels have long sought to cater to affluent shoppers from the tech industry, and it comes as the luxury industry faces its biggest slump in years and searches for new sources of growth.
All right, let's move to the world of automobiles. And Japan's Nissan and Honda's merger talks now have the blessings of Nissan's largest shareholder, Renault, which says that it is open to the idea of the merger. Take a look.
Japanese auto giants Nissan and Honda are in talks to form an alliance. That's according to a source close to the matter. But there's one European party that will take a particularly keen interest in how things develop. French automaker Renault is Nissan's largest shareholder. 2 sources have told Reuters the car giant is open in principle to Nissan pursuing talks with Honda. The sources said Renault would examine all the implications of a tie-up to ensure its own interests are protected. Japanese auto giants Honda and Nissan are reportedly in talks to set up a holding company. The move could help them share more resources to face tough competition. A spokesperson for Renault said on principle the automaker supports Nissan's efforts to restore its business situation, but they declined to comment on the current merger talks. The talks were first reported by Japan's Nikkei newspaper. Investors were pleased by the report as Nissan's stock rocketed up by close to a quarter. Renault jumped up over 6%, but Honda dipped 3%.
All right, let's stay with automobiles and let's stay with Japan. Waymo, the autonomous vehicle arm of Alphabet, Google's parent, is set to launch its first international robotaxi testing program in Japan's capital Tokyo in early 2025. This marks the company's expansion beyond the United States with plans to gather valuable data on unique driving challenges such as left-hand traffic and dense urban environments. Waymo's partnership with local taxi operators Go and Nihon Kotsu will facilitate the initial phase of testing where human drivers will manually operate autonomous Jaguar I-Pace vehicles to map key areas of Tokyo, including the crowded ones like Shibuya and Shinjuku. The data collected will help refine Waymo's AI systems. Remember, this comes at a time when Alphabet, Waymo's biggest competitor, GM, has done away with its Cruise robotaxi platform. Volkswagen has meanwhile resumed crucial talks with unions to address cost-cutting measures at its Germany plants. The negotiations aim to reach an agreement before Christmas to avoid potential strikes in 2025. Take a look.
Crunch talks between Volkswagen and unions over cuts to the automaker's German operations resumed on Wednesday. It reflects intense efforts to strike a deal before Christmas and avoid major strikes in 2025. The bitter standoff is over potential factory closures and mass layoffs, and has thrown Europe's top car maker into its biggest crisis in years. A person familiar with the negotiations said an agreement before Christmas is still possible. But they cautioned that the complexity of the talks meant there's no guarantee of a deal. Germany's IG Metall union has vowed fierce competition to any plant closures and staff cuts. It said it would provide an update depending on any new developments. The two sides have been trading blows over what Volkswagen says are necessary cost cuts to be able to compete with more agile and cheaper Asian rivals. Germany's most powerful union hopes for an agreement this week to give workers peace of mind before Christmas. On Wednesday, the Financial Times reported that the Porsche Piech family, which controls Volkswagen's top shareholder, is increasingly concerned by the lack of progress in the German automaker's restructuring. According to the report, it's been pressing for the closure of several German factories. The family controls Porsche and through it holds 30% in Volkswagen.
Well, that's all we have time for on Morning Brief at 9. This is Karthik Malhotra signing off, but news continues right here. Join Shriya Kundu as she brings you the latest news updates at 10 a.m. You're watching News9 Live.
Hello. If your money is fraudulently taken by somebody or if cyber scam takes place with you,
क्या हम कृष्णा दास गुप्ता जी से बात कर रहे हैं?
and you report it to the bank within 3 days of the crime, the bank is liable to pay you 100%. This is clear-cut guidelines.
मैं डिपार्टमेंट से बात कर रहा हूँ.
If you report it within 7 days, the bank is liable to pay you 50%. And if you